Hello, everybody, and welcome to our latest energy market update. Today, I will talk you through some chart analysis, which will give an idea of the underlying sentiments in energy markets, and also we'll cover some of the headlines that are driving energy prices currently. So first off, let's look at the benchmark TTF winter gas contract, and let's use that as a proxy for broader gas and electricity markets. So here's a winter TTF. First thing we want to look at on this chart is over here on the left-hand side where I'm hovering the mouse currently. So back in February 2024, the market made an important cyclical turning point. And from that point, the price pushed up to February 2025 where it spiked. And then based on deteriorating economic sentiment, based on potential for a trade war and Trump tariffs, etc., the price fell heavily into mid-April. But since that point, the price has begun to find a floor. The things we'll be looking at from a chart perspective are, first off, these converging white lines. And in chart terms, they're referred to as a wedge, where the price is getting squeezed into a narrower trading range and hence creating the potential for it to break out, and in this instance, for it to break higher. So the price has begun to break higher over the last couple of weeks, and that's our first buy signal. I've numbered that number 1 here. And our second sort of buy signal, or a trigger level, I've labeled number 2. That's this dashed orange line. So the price is currently consolidating around that level. It hasn't conclusively broken through. If it does, that would create a nice little double bottom here, and a double bottom is a reversal pattern, suggesting the price would push higher in the near term. So we'll continue to monitor that, but that's where the price is consolidating for the moment. And if the price then pushes higher, the next trigger level we'll be looking at is the Fibonacci retracement level. So to explain, we've applied Fibonacci retracement levels from this high up here in February to the low in April. And the first retracement level is 38.2% of that move downwards. And that is probably our final trigger level. And if the price was to push up through that, that would suggest that prices will continue to push up through the summer at least. So that's where we are from a chart perspective. I'd suggest it's moderately bullish, i.e. moderate potential for the price to continue pushing higher in the near term. So what are some of the factors supporting prices currently? So first off, I would be looking at the broader economic sentiment, and let's look at the stock market in order to gauge that. So here's the S&P 500 in the US. And what we can see from this is prices fell heavily here from February, just like gas prices. It was, in fact, that deteriorating economic sentiment from the stock markets that fed through into gas and hence electricity prices. And just like the gas market, the stock market bottomed here in mid-April. Since that point, the stock market has recovered strongly. And I suggest that's one of the factors putting a floor under energy prices currently, that improved economic sentiment. The other thing we would be looking at that can potentially support energy prices in the near term is the gas storage situation across Europe. So in Europe, they pump gas underground during the summer, and they take it out during the winter. So actually, what I have on screen here is last year's storage levels. So you can see last year at this point in time, storage levels were 66.29% full. And if we look at where they are currently, if you just bear with me for a second, they're well below that level. Gas storage in Europe is currently, it's just over 40% full. The exact figure being 43.67% full. So we're well below where we were last year. And in fact, we're well below the 5-year average. We're at 20% below the 5-year average. So that means this summer, Europe will be scrambling to get gas into storage, and it needs to access a lot of that gas or buy a lot of that gas on international markets in the form of liquefied natural gas. And the more demand you create for gas, the more you'll drive up the price. So those low storage levels, that's something that should support the price as we move through the summer. And I'd expect those storage levels to become increasingly into focus in the coming weeks. Another thing we would look at on the geopolitical front is the Iran nuclear talks. So here's a headline from CNN, and Donald Trump is suggesting that he is near to a nuclear agreement with Iran. So that's neutral for energy prices currently. If those talks were to break down, then that would definitely be bullish. That has the potential to spike energy prices. Just because Iran of its location on the Persian Gulf, it can impede energy flows from the Persian Gulf. And 20% of global liquefied natural gas comes from the Persian Gulf, from Qatar. And indeed, 50% of Europe's gas is in the form of liquefied natural gas. But for the moment, those talks are progressing, so it's neutral for energy prices, but we would keep an eye on that. So taking those three factors into account, let's finally look at where the investment funds are positioned in the gas market. And we look at where the investment funds are positioned because they are seen as the smart money in the market. So there's a weekly report from the ICE Exchange that shows us where investment funds are positioned. Here's the most recent report. I've highlighted it in green, investment funds. They are 307 million contracts long meaning they've bet on the price rising. And those long positions represent 19.69% of all long positions in the market. That's a slight increase in last week when it was near to 18%, but they're still well down where they were at the beginning of February when the market spiked. At that point in time, investment funds represented about 31.7% of all long positions in the market, but they've gradually become longer in recent weeks. So that's where we're at currently. Just to summarize again, chart analysis is moderately bullish, suggesting potential for prices to rise in the near term. Factors supporting that, improving economic sentiment. I think storage, the poor storage situation in Europe, gas storage situation, will become increasingly into focus in the coming weeks. We'll keep an eye on the Iran nuclear talks, and the investment funds, which gives a steer on where the smart money is in the market. They're becoming moderately more long, more bullish on gas prices. So that's it for the moment, folks. If you have any questions, please feel free to drop me a line. All right. Thank you very much.